Friends, hello all of you. I welcome you all to our today's discussion. We'll be discussing about the concept of IPO. And IPO, it stands for Initial Public Offer. In the previous classes, we are talking about primary market as well as secondary market. And in that context, also we have discussed that how securities, that is, it may be equity shares, it might be bonds, and it might be right issues. So all these kinds of securities are traded in the market. And when you talk about initial public offer or IPO, we'll be talking about exactly that there will be some securities which will be issued to public for the first time. That's why it is called as initial public offer. So various basic concepts we are going to learn. So let me share the screen with you. Okay, friends. So when we're talking about IPO, we'll be dealing with the public issue. As you know, we'll be talking about initial public issue or IPO. So in the earlier classes also, we have discussed about this thing, that there are two possibilities. You can say two methods of issue. One is, can you guess what are these issues? Can anyone tell me? Can anyone tell me what are the two kinds of issues we are talking about? One is fixed price issue, and the other one
the second one, book building process.
Book building process. These are the impact two process. Okay. In the meantime, I request all of you, specifically Sambit, who is not participating, please keep yourself muted. Okay. Please mute your speaker. Whenever you're participating, you may switch in and talk. And again, by default, you should keep it in mute. So yeah, yes, friends, what we're talking about, there are two methods. One is fixed price method, where a prospectus is issued. Of course, on all the kind of initial issues, we need to issue a prospectus, because prospectus is the document through which you invite public to subscribe the securities. Right? So prospectus is issued. And in case of fixed price, for the prospectus mentions what is the amount, what is the price at which offer is made. And in case it is issued through book building process. So in book building process, what happens, the exact price at which issue will be made is not known, because the issue of equities are made through a book building process, or you can say through a bidding process. So therefore, what happens, the price band is given, price band is provided by the issuer, and the investors has to put their bid, and finally on the basis of their bid, the final price at which equities will be issued will be decided. Bid has to be made within the band, within that price band. In our initial classes, we had already demonstrated one live issue, live book building issue, and there you have seen issues are made, people are bidding. So every day one can see the status, that how many people have bidded, or how many shares are offered, how many, that means investors might have given their offer to subscribe these many shares at this price. Once the entire issue is subscribed at a particular price, and at that highest price, issue will be closed. That is the process through bidding process. We'll see how that is done. In that case, what happens, the prospectus doesn't specify what is the price, because price is not finalized. So that kind of prospectus report was red herring prospectus. In the last class also, I had shown one red herring prospectus. So you can go to any stock exchange's website. If you can find out any issue, you can download the prospectus therefrom. And if it is a fixed price issue, you can see it is a normal prospectus, price will be mentioned there. And if it is an issue through book building process, you can find a red herring prospectus, where price data will not be there. We'll see there. We'll once again visit stock exchange and we'll try to find it out. Now, friends, So these are the two methods we're talking. The advantage is why people go to public, because you see any business needs money. Money is needed. When they need capital and the size of requirement is large, so any businessman would like that investors should come. And this is offered through which a large number of investors may join the company. Through this process, they can become the shareholders. If they subscribe the equity shares, they'll become the shareholders. So the advantages of public issue is that one can invite a large section of public. Directly, they'll be applying to the company through certain process, of course. And the equity shares will be allotted in a non-discriminatory basis. There are strict controls about the allotment of shares. So it will be allotted without any discrimination. Although it is an expensive method to issue shares to public issues, but still, if you want that size of issue to be subscribed, then you have to follow this method. And this public issue through IPO is very suitable, definitely suitable for large issues. Whenever an unlisted company makes either a fresh issue of securities, company is unlisted right now, but company is making a fresh issue. Once it is spent, it will be listed. Okay, so unlisted company either makes a fresh issue of security or offer its existing securities for sale, or both. Either or both means it may be a fresh issue or it may be issue of existing securities. Okay, and this issue is made for the first time to the public. Securities were there, but for the first time it is offered to the public. It is called as IPO. And this process of IPO is in fact the paves way for listing and trading of issuer securities in the stock exchange. Once issue is made, once public has subscribed the equities or whatever may be the securities, then they can be listed, and thereafter it can be traded in the stock exchange. So it is a process, you can say it's the first step. After that, listing can happen, then it can be traded in the stock exchanges. This is the meaning of IPO or initial public offer. Hope it is clear to you. Okay, one connected term is also used, which is called as FPO, that is called as the further public offer, or many times it is called as the follow-up public offer or follow-on offer. Okay, follow-on offer or follow-up public offer. That means if the company has already come with an IPO and again, maybe for the second time or maybe for the third time is making one more issue, fresh issue of securities, then that is called as the follow-up offer or FPO. So that's the difference between IPO and FPO. And since you know there are two methods, one is fixed price issues and the other one is book building issues, we can differentiate between them. What happens in case of fixed price issue, what happens in the book building process, we'll be learning that thing. Before that, in the meantime, what I will do, I would like to take you to the website of a stock exchange where you can see how offers are made or how issues are made. So give me a moment for that. But as of today, there is no live issue through book building process, so we cannot see it. But in the previous session, somewhere there was an issue which had opened on 29th September and it was closed on 1st of October. And at that time, fortunately, we have already visited. You can see our earlier videos and you can understand the process of book building. Yeah, now friends, still let me visit to the Bombay Stock Exchange website. If you want, you can visit to the National Stock Exchange website also. More or less, the process is same. So I am visiting here bscindia.com. Are you able to see it on the screen?
Yes, sir.
Keep on responding. Yeah. Now you see. So I wanted to show you. I wanted you to show this particular link, public issue. right? I think you are able to see. If you click here, public issue, yeah, you see this is the various data regarding how many IPOs are issued during this period. IP on the main board, right? And these are the live issues right now you are having. But you are finding this is the debt issue, debt issue, debt issue. This is a buyback issue. Then this is a right issue. Okay, if you go to the next page, let me take you to the next page. Yeah, here also you can find so many debt issues are there. Right issues, buyback, takeover, call money issues. So these are various issues are there. Okay. There is no equity issue right now, fresh equity issues right now. So if you frequently visit, you can find out equity issues. Okay. Right. You see, these are various documents. If there is some equity issue, you can click here to see the offer document. Debt issue, you can see the offer document. Okay, this is the offer documents for IPOs. Right. Just a minute. Okay, RHP means if there is some equity issue, you can find out red herring prospectus. Right. So, but right now, what I'll do, I'll take you to the public issue. Public issue watch. You see, these are the public issues are there. Since equity issues are not there, let me take you to this place, debt issue. So you can find out the details when issue opens, when issue closes. You can find out. Okay. You can have a look at here. So if you want to download prospectus, you can download the prospectus. You can understand everything about the issue through this process. Okay, should I download for you? But this is a debt instrument, not an equity. So I'm downloading it for you. Are you able to see it on the screen? PDF file.
Yes, sir.
Yes, sir.
It is loading, sir.
Okay, just a minute. Now you see, right? You are able to see it. So similarly, whenever an equity issue you can find out, you can exactly find at what price, what is the issue, you can find out. Okay, this is about issue details are here. Who are the promoters? What is the general risk? What is the credit rating? Since the debt instrument, you can find it out. Okay. Are you seeing it? And if you want to see a red herring prospectus, which all, of course, I had shown you in your previous class. Once again, still, I would like to show you what is a red herring prospectus. Just a minute. I think last class we have seen the red herring prospectus. Give me a moment. I got it. Aditya Birla Sun Life AMC Limited. This offer was already closed. Now it is closed, and past October itself closed. Are you able to see it? The red herring prospectus? Yes or no?
No, sir.
No. Now you see. Okay. Hope you are seeing it now.
Oh, yes, sir. Visual.
Yes, sir.
Yes, sir.
Here you see price data is not there in this rupees dot, price of equities dot. If this kind of thing is there, it is called as, you can see the top line, this red herring prospectus. This is called as the red herring prospectus because price data is not there. This is only an invitation where one has to bid within the price band. Price band is decided by the merchant banker after market study. They analyze the market and they feel that this many shares can be subscribed at this price. They feel so. So on that basis, company comes to an issue. So in fact, when you talk about the book building process, this is in fact a price discovery mechanism. Through this bidding process, company discovers what is the actual price. Okay, friends. Now, if you want to find out the difference between this fixed price issue and book building issue, so I will be sharing the file with you right now. Yeah, this one. You see, you can differentiate it like that. In a fixed price issue, what happens, the price at which securities are offered and would be allotted is known in advance. Company itself says, discloses in the prospectus that these many shares will be issued at this price. So it is known in advance. Okay, but how much will be the demand? That will be known only after the closure of the issue. But in through book building process, what happened? A price band is offered. First price band, in case of that Aditya Birla Sun Life AMC, I think price band was something around 695 to 712, something like that. So within that range, one has to give his bid. Suppose you want to purchase 10,000 shares at 695. So you give your bid 10,000 shares at 695. Like that, throughout India, people will be giving their bid. So company can understand how many people are ready to buy shares at 695. Let us say company is issuing 10 lakh shares. So if they can understand at 10 lakh shares, whether it can be subscribed at 695. Okay, some people might be quoting 696, some people might be quoting 697, some people might be quoting 698, like that. Are you getting? So not only you, throughout the India, everybody will be giving their quote. What the company would like to do? Company would like to issue it at the highest price. Company will see, let us say highest price band is 712. So whether at 712, how many people have issued? How many people are quoted? If the entire share can be subscribed at 712, then what will happen? They will be very happy. Is it that the entire shares are subscribed at 712? They'll freeze the offer. In case it is not subscribed at 712, suppose it is entire shares can be subscribed at 711. Then also okay, they'll freeze the price at 711. Okay, so this is how they can close the offer. Okay, so in book building process, what happens? A price band is offered by the issuer within which the investors are allowed to bid, and the final price is determined by the issuer only after closure of the bidding. When bid closes, then final price can be. Okay, in the company which we had seen in the previous classes, that issue is oversubscribed. Oversubscribed means many people have applied. That means subscription or your demand is more. Okay, normally that happens. So demand of the security is upward and its various prices are available in the real-time basis. Stock exchange shows that this much is the demand. So if you take, let me take you back to the previous screen. So this was the previous screen. In the earlier classes I had shown you, but if you see here, in book building process, just a minute. This is the screenshot of the previous classes I had taken. Yeah, so this was on 1st October, we had visited to the stock exchange site, and this was showing like this, Aditya Birla Sun Life. It was the live issue, and it was through book building process. And these issues were there for fixed price offer, right? All these issues are closed right now. These were the live issues at that time we had seen it. Okay, now you see What is the price band? 695 to 7112. So every day people used to give their quote. And there is a book runner who maintains this data, right? If you see the, okay, this is the Aditya Birla Sun Life Limited's data book building process. You see, this is the, at a particular point of time, let us say if you take September 30 data, at 695, these many equities will be subscribed. At 696, these many equities will be subscribed. So at 712, these many equity will subscribe. Okay, now issue is not closed because offer is still open. So people will keep on bidding and the book runner will maintain this running data. And finally, it will be seen when the entire shares are subscribed. And what is the highest price? At that price, company will freeze it. Company will freeze the offer. Are you getting me? Company has
Yes,
offered.
sir.
This is the issue size. You see, this is the issue size. So what is the price at which these many shares can be subscribed? And this is the price band. Okay. And this is the issue period, 29 September 2021 to 1st October 2021, 10 a.m. to 5 p.m. One can do the bid. Okay, online bidding is possible. One can make the bid. Hope you have understood the book building process. Right. And what happens? Stock exchange gives certain reservations. So in case of fixed price issue, 50% shares offer are reserved for application below 2 lakh. That means for small investors. And in case of book building process, 50% of the shares are reserved for this thing, qualified institutional buyers, 35% for non-retail, and remaining 50% for retail. This kind of reservations also apply. And these are the basic difference between fixed price issue and book building issue. And I told you under this thing, book building process, there is a reservation for qualified investors, qualified institutional bidders, buyers. And you see, these are called as the, these are understood as the qualified institutional buyers. Who are the qualified institutional buyers? Public financial institutions, scheduled commercial banks, mutual funds, foreign institutional investors, venture capital funds, right? Foreign ventures, just have a look. Insurance companies, provident funds, pension funds. So these are called as the qualified institutional bidders. There is a reservation for them. They can make investment. Okay, now you must have understood that book building is a process through which initial public offers are made or follow-up public offers are made, and it is a price and demand discovery mechanism through which one can discover the price and the demand of the securities. And this is a mechanism where during the period for which book of the offer is open, bids are collected from the investors. Investors give their bid, they are collected, and the book runner maintains that data. And the process is directed towards both institutional as well as retail investors. Of course, there is a reservation for institutional investors, but retail investors can also participate. And the issue price is determined after the bid closure. And at the closing time, one can understand what is the final demand at that price. Okay. 1 second, you can have a look at the, if you will be frequently visiting to the stock exchange's website, be it Bombay Stock Exchange or National Stock Exchange, you can find definitely some different point of time, you can find some live issues. At that time, you will be able to understand how book building happens. So let us now learn the process of book building. Okay, in case of fixed price offer, it is very simple. People will offer. If it is subscribed, people will be allotted. If there will be oversubscription, people will be allotted shares on pro rata. Pro rata means proportionately shares will be allotted depending upon the subscription. Okay, more number of people are applying. Suppose you see company is issuing 10 lakh shares, but 20 lakh people has applied. So shares will be allotted pro rata. That means those who have applied for 2 shares, they will be getting 1 share. Proportionately, issue will be made. And what happened in the book building process? The issuer who is planning to make an offer nominates a lead merchant banker. Merchant banker manages the issue. The lead merchant banker will be called as book runners. Right? He will be maintaining the bidding data. The issuer specifies the number of securities to be issued and the price band. As you have seen, issuer will specify these many securities will be issued and this is the price band. Issuer also appoints a syndicate member with whom orders can be placed. That means how bidding will be made. Bidding will be made through syndicate members that also issuer decides. The syndicate member inputs the order into electronic book. I had shown you the final statistics of demand at different prices. So who will put data? It is the syndicate member who will input, will feed the demand data in the electronic book. This process is called as the bidding. The book normally opens nowadays. It is open for 3 days normally, as you have seen. Book had opened on 29 September and closed on 1st October. For 3 days normally it is open. Bids have to be entered into within the specified price band. People have to give their quote within the specific price band. Bids can be revised before the book closure. On the closing of the book building process, the book runner evaluates the bids, and on that basis, finally what is the demand and what is the price level that gets finalized. The book runners and the issuer decides the final price at which securities shall be issued. Generally, the number of shares are fixed. The issue size gets frozen based on the final price per share. So finally, when offer closes, issuer knows that at this price, these many shares will be issued. He allows the shares, and for unsuccessful bidders, he refunds the money. Refund advices or refund orders are issued for the people who are unsuccessful. This is the process through which shares are issued in book building process. Hope you have understood. Okay. So you already know what is the right issue, and you have seen the sites. The right issues are also made. That issues also coming for the first time, but they are issued to the existing shareholders. Right. So what is fixed price offer? You have understood. Price is known in advance. Demand is known after closure of the payment. Advance payment has to be made, and reservation also applies. What is book building? That also I told you. Offer price is within a band. Demand is known on real-time basis, and payment is required. 10% of advance is normally required. Reservation is also applied. Now you might be thinking that how book building process, or for that matter entire issue process, how that are monitored. There is SEBI guideline for issue of securities. That guideline is called as the Securities Exchange Board of India Issue of Capital and Disclosure Requirement Regulations. Okay, this guideline is relevant for you. So it is a very long guideline. You need not remember the content of the guideline, but have some idea that is a guideline which is used for issue of securities. If you want, I will be showing you that guideline. Just a minute. You can find out that guideline in SEBI website. Okay, let me take you to SEBI website now. Just a minute. I'll be showing you that guideline also. It's still opening. Please wait for a minute. This is called as ICDR regulations, that is issue of capital and disclosure requirements. Same site is a little slow. Still, I'm trying to open it. Okay, I'll show you. It's still opening. Let us wait. Now, in the meantime, let me inform you one thing, that this book building process can be conducted through internet. That means online, one can submit the bid. This is about book building process. The only thing which I would like to show you is about the SEBI's guideline. For that thing, I need to visit to the SEBI website. Yeah, it is opening. Just a minute. Yeah, are you able to see it here? SEBI website,
Yes,
are you able to
sir.
find it out? But just a minute. That PDF file should appear here in that black portion you are seeing, no? So it will be appearing. And let us wait. And others, you see, SEBI regulations are here, SEBI guidelines are here. So the issue process, what is the requirement, what are the terms and conditions company has to follow, that one can see from this guideline. Okay, if you visit SEBI website, you can find out other data also, like various reports and statistics which may be helpful for you. Okay, then you see history of Indian security market, that may be useful for you. Status of various things, you can find it. Filing, you see public issues, red herring documents filed with ROC, final offer, other documents, some data, you can find it out. But the regulation is not opening right now. But you can search it later on. Security and Exchange Board of India, issue of capital and disclosure requirement regulation 2018. It is amended up to January 1, 2020. The amended regulation should be appearing here. Here you see various other regulations are appearing, but the regulation part I am looking for. Yeah, we got it. Finally, it appeared. Are you able to see it now? Are you able to see it?
Yes, sir.
Yes, sir.
Yes, sir.
Yes, sir.
Okay. SEBI issue of capital and disclosure requirement regulation. How capital will be issued? Right. So if you go down, you can see various rules and regulations are there. But again, you need not remember it in detail, but just go through it and have some idea. You may download it from the website. It's already shown you. You can find it through search engine. You can, in the search engine, you can type the name of this guideline, the name of this regulation, and then you can download. Okay, in which applicability of this regulation, you see initial public offer by unlisted issuer, right issued by listed issuer, further public offer, preferential issue, qualified institution placement. For all these cases, this guideline will be applicable. Are you able to see it? So one can find it out. Eligibility requirement, who can issue. Okay, these are various contents. One can see it. Eligibility